Good morning, everybody. All right, let's get going here. The things just get more interesting, don't they? This surprise move up in crude oil. Um, what a jump, and right up to the top of the range. Yeah, we'll deal with it, Alex. I saw. Um, so that has to raise inflation concerns, which all the focus shifted to. Well, they can't raise interest rates, bank failures, and so on. Like I said, it gets interesting. We'll see how this progresses. I think if crude oil keeps pushing up here, it has to become a focus. Yeah, I know. I already heard the guy. It's not core inflation. Watch what happens when people start screaming about the price of gas. We'll see if that goes up, and we'll see how far it can be ignored. You know, um, markets are always moving, and something gets shifted around to make things questionable, or as they be like last week, things started to shift in a way that there was a broader market participation versus those tech stocks. We talked about breath moving up finally above the zero line as it did, whether that was just end of quarter window dressing or real. I guess we'll see in the coming weeks. And it's at a point now where the markets typically take a bit of a breather. Um, the good thing is sentiment is not up to an extreme. So pullbacks, let we forget the oil thing for a moment. That throws a monkey wrench into things. But what we want to look for in the coming days is for this line to pull back towards zero. And historically, that is where the advance continues. How much this has an effect, we'll see over the coming days and what is said. But this is what we're going to be looking for because, like I said, just like here, this was going down, down, down. It comes up to the zero line, and it's a good measure of where markets will resume a trend. And this is a short-term trend that took out a swing high, which suggests it can continue to go up toward this prior high, maybe slightly above it, as long as there isn't any kind of a deep retracement. Now, we got to shift this here. And interestingly, this 4,000 strike, which has had this huge open interest in calls and puts, as you would think would be normal, the majority of the open interest in the calls came off as this moved up, but not in the puts. So this should be a floor. So should we get a pullback, this should be where buyers should want to step up into this area, which would now call minor support. Depends on how it gets down there. And a vertical move down there wouldn't be a good thing. More controlled kind of a, I don't know, whatever kind of an angle, 30-degree, 45-degree angle kind of movement down there would be what we would want to see versus a vertical move to the downside. So that's what we'll look for in the coming days into this week and see how this all plays out, whether, who knows, maybe it collapses right back down again or whether it continues higher tomorrow. I mean, we'll just see. Just looking at these internals, this is a positive. It's at an extreme, but it's finally, and the way it moved up like that, a straight beeline move historically has been positive, and that's what we have to go on. And this is neutral. They're not together, so that's really not a concern right now. So we move on. SPY gapping down a little bit. I haven't shifted my lines here. Anyway, it cleared the pivot. It's got room to go up. Where is it now? Well, not doing any real damage here. As far as this move down, it did create a little void, as you would imagine. Where it stops now, we'll have to see. that there isn't any significant support points, but on a very short-term basis, if this, why is that like that? It's kind of weird what happened there at the end of the day, this little separation there, something in the data. Anyway, a pattern like this, I know it's an hourly chart, but patterns are patterns. As you look at different time frames, you put in the perspective of that time frame. But a pattern like this, where there's a little consolidation and then a wide range bar breaking below that on a closing basis, creates uncertainty and would likely get prices pulling back further. So right now, things are just kind of hanging there doing nothing. All right. So where are they at? On the daily chart, right at the top of the wide range bar. No big deal. Now we go to SPX. Top of the wide range bar. And I didn't adjust this today. We had some little issue with the Zoom room there. So I have to do this over. So average range, even with that range expansion day on Friday, which, look, a range expansion day, this was a mess, just a mess. And well, maybe back. Why did this happen? Well, markets are focused on interest rates. Besides end of the quarter, interest rates did drop. I'm going to come back to that over here where they hit the 50 and the 200, and then they began to drop. So it was like, multiple things coming together at the exact moment, like as if it was, orchestrated ahead of time. End of the quarter and interest rates dropping, giving the markets, banks. You look at KRE and different banks, they held up. KRE didn't go up, but it held. The REITs that were been in trouble, that stock prices went up. So everything came together for the markets to rally. Now we get into the second quarter and it's real time, and we'll see how that plays out. We talked about the VIX. The end of the week coming down to support. It can hang here for a while, but there are multiple concerns. Now, this oil thing is something new. The VIX is down here at this low, and you can see it hung down here for a few days before it went up. And over here, it turned. And so, going out over the course of multiple months, every time it's come down here, it's gone up, not immediately, and the markets have pulled back. You can see even last year, but this is a new year, so things begin to change. All right, SPX. Jake's got 40.50 and 40.50. That's got to be down below. 85 by 95. Where does that put us? 40.50. Okay. I wouldn't call it a no-brainer. Let me just shift that up and shift that down. Top, it's below the average range. It's at the bottom there. It is support. And my hesitancy is that this is a wide range bar. Prices should go up. How much, the reaction so far is muted as to this jump in oil, and markets are just ignoring it. They don't want to pay attention to that right now. But it could be hit if things all of a sudden got a little bearish. Under normal conditions, it should not. And up above 41.50, and McGraw saying 41 over 41.50, below 40.50, which, and if things should drop, you'll get premium below 40.50. It just has to happen early in the morning, relatively early. And above 41.50, above 41.50. Yes. Now, 41.50 is only 45 cents by 55 cents. I don't know. 41.45, 70 by 80. It should be okay, but You know, you want this to be as much of a no-brainer as it possibly can be. So let's see which way things move first thing as prices open up. But if you could get above 41.50 or below 40.50, those I believe would be safe levels. And interesting, right? The outperformer underperforming a little bit. You see it. This is red versus the other. Well, this is turning green, red now, but these are green, and this has been the outperformer, and it's gapping down a little bit. You can see this whip here. It was down more. So it would not be surprising to see some type of, resting type of a day after this little run up. The crude oil so far, it's kind of a non-event. I'm sure everybody's taking notice of it. But so far, the reaction here is pretty normal as to moving up toward, and this has got room, before it would reach the top of the trading range. It's got room to do that. And in reality, where the breath is, prices should correct a little bit. Now, this doesn't happen like on an exact moment as if intraday with an NYSE tick extreme over 1,000, where things will probably stall within a minute or so. Daily internals, they don't work like that. The market is doing something normal. It does do that. Well, sometimes it's just the new normal, Steve. But what we want to do now, and you see this prior high, the idea of calling, minor support, the high that was taken out. I don't know if that'll hold, but somewhere in here as it pulls back and you see this consolidation where you look directly to the left there, if things begin to pull back, that's where buyers should show up, where there's this consolidation there. Improvement, but just a trading range. It's pretty messy, but as I said, we're going to see how things unfold here in the coming days. As well, this week, end of the month, beginning of a new month, typically positive money inflows, and so I think the markets have that opportunity, bearing any surprises that rattles it, to continue with some bullish price action. Even the Dow, reversing this big red bar. I wouldn't say that's totally out of the woods. It's just a mess, and this is now a void. And just the normal situation would be some kind of pullback or consolidation, and we'll take it from there. Interesting. That was up a little bit. Now it's dropping again. So things are changing in the moment, kind of aggressively. I don't know if anything's going on here as far as news goes, but interesting that this is beginning to fall as quickly as it is. Oh, this is up at resistance, but let me just go to this screen. Where is it? Okay, this is going to report earnings in a couple of weeks. Not a concern right now. For the weekend video. You want to watch the dollar as it comes down to this support level, what it does. Especially, if you're into, the gold or looking to get long gold, this is a little bit of a continuation pattern right there. It is a weekly chart. But, you want to keep an eye on the dollar as it comes down to this level, because looking to the left and interest rates down below this level here. I'm going to go back and look at where that is on that other chart we were looking at. Down below here, the markets are going to like that. And there's interest rates continuing to move lower, and there is a void below. Up above this little congestion area there will not be welcomed. All right, go back here. So you want to keep an eye on the dollar as far as gold and silver goes. We looked at oil, Bitcoin hanging tough up there, just below 30,000. It's going to have some trouble, but again, that thing came back from the cliff down here. It was an amazing run. And, everything came back last week from where they could have rolled over, and we'll see how things play out over the coming days as to whether this was just end of quarter kind of thing, or whether things begin to go back into that bear market thing. But I think we have at least a couple of weeks until the earnings start before any real concerns begin. Well, yours, Dan.
Good morning. Yeah, crazy end of week rally there. Greg, I noticed in your weekend video, it's the first time I've heard you say this looks like the low for the years. It is in, we had that talk in the green room about we gotta focus on price action, and that's the big move. Negated the weekly, negated the regional bank crisis. Peak inflation, it seems to be, is priced in.
It's so far away to get back to the low of the year now. And after last week's price action, we see a successful retest of the December, January low. So the S&P is still just in a trading range, just, smaller trading ranges within bigger trading ranges. So I wouldn't call it a bull market, but if it breaks below 3,800 at some time in the next quarter, that bias will change, that the low, new lows are probably coming. So, we have to change with the markets, and as things develop, of course we do.
Right, totally agree. And even look at the monthly here is a inverse head and shoulder. You have 180 breakdown failure, and a bear sandwich closing breakout. So yeah, I'm with you. Buys on pullbacks. We've been finding amazing bullish setups, and I was saying this is a pattern that we don't trade. It's up 4 bars, wide range extending. But as you see in the weekend letters, we have longs and shorts, but there's more bullish short ideas. I have a couple of alarms going off. We will review at the open, of course. XOP. I read that the Saudis are doing this production cut because they're pissed at Biden for breaking his promise of not refilling the reserves. So they're like, all right, well, F you. I know how to get you back. The Dow relative strength today. So I immediately just look at the Dow 30 and see what's doing it. We know these oil stocks are going to be just gapping all over the place. I mean, look at that. Look at that gap breakout there. 170. Amazing strength. No, that's exactly right, Joe. It is. Is it? But Joe, it's my first reaction. It's like they're just big boys. In a sense, it's like 2 little kids in a schoolyard, taking the other one's toy away and say, "Oh, I'm going to get you back." And it's the same thing here, just on a bigger scale, is all. But you're right. People are still emotional and greed and politics, and that's what makes people tick. All right, so we have that, and I see UNH is up the most. And as you know, the Dow is price weighted, and that's why expensive stocks move it around more. But look, It's not, it's gapping right to this last week's high. So that's depending on how it pulls back, this is going to be a bottoming pattern. So that will be a put spread I do. I don't have any earnings really to look at. Let's just go through this list here and see what I had. I had NEM on it when my computer booted up. NEM was here for some reason, and this weekly chart showed up first, and I'm like, man, look at this bottoming pattern in NEM weekly. That's a 1, 2, 3 with an inside bar with a price void. So NEM is bullish consolidation at resistance. So this looks great. Let's keep an eye on this. SAIC earnings. Yeah, see that would be what we call a gap and crap, things that go vertical into earnings, but unfortunately it's already filling the gap. ASMD, this has to be a bio down $40. So that looks like a disaster du jour of the day. Is it? Yeah, I'm open up TC. I'm assuming whenever I see a gap like that, I'm assuming it's just a bio. Jose asking about Nanny and Polex. Nanny breakout daily, weekly is a buy setup. So yeah, it looks great. NNDM and Polex. Oh wait, I had to switch charts on you. Hold on. NMDM. It is a 1, 2, 3, but it's kind of run a lot, and you got this unfilled gap. So I don't know. I'm not crazy about that. Polex is better, and the reason why is it's this big old mature bottom with a bigger void. So Polex is much better for me. And the first one you said again, Nanny. Yeah, set alarms, not bad. I saw this thing gapping down, WWE. That's a shock bar. We'll come back to it. I have no pattern right now, but we'll come back to it. Spot buyout. Yeah, spot I like a lot over Friday's high. So when you say buyout news, Austin, the fact that it's gapping down tells me that the priced in buyout news is not as favorable as it was last week. Tesla had a closing. This would be an ideal 1, 2, 3 target 200, but it's gapping down here. There's a bunch of EV companies that were reporting deliveries, and even it's one of these things, just like earnings, they beat whatever they predicted or forecast, but they didn't beat the street's expectation, so it's down. That's actually a shock bearish bar because of the depth. $200, just look at this horizontal line. That's like an 80% gap in there. So we look at retracement levels from pivot to pivot, but we also look at retracement levels in WRBs, and that's an ugly gap. And the other things look like they're taking a breather, but that's the weakest one. McDonald's, I read in the paper, in the journal, that they're shutting down their US offices for 3 days, Monday to Wednesday, so they can fire people electronically, so they don't come into the office. I just was like, wow. No, I personally never heard that before, Patrick. And why would a Dow 30 company have this risk of a riot? But yeah, it is an amazing story. I just read a few sentences of it, but they're firing people. And they said, I think it said they have 7,500 corporate employees worldwide. All right, XOP, nothing to do there. We talked about these double bottoms last week. In fact, the put spread was in last weekend's letter. Housing stocks had an amazing day on Friday with interest rates coming in. So I wrote a couple here that I want to watch on pullbacks. Look at MDC, got now rising 2050 with a void. Beezer, these would be great 1, 2, 3s or 1, 2, 3, 4s. Look at this thing, greenback almost is at all-time highs. Toll, beautiful 1, 2, 3. If we get it, Pulte is actually even better because it's cleared more resistance. This one looks good now, actually. I'm going to put this in a window. PHM looks good. Maho, closing breakout and a strong uptrend. This thing. So look at all these housing stocks I got on my long list. Fast, top of the range, but bullish daily, weekly, monthly.